Welcome back. This is Open Exchange, and we are coming to you live from the CNBC-TV18 Motilal Oswal studio. Well, Prakash Diwan is still standing by, so let's discuss a couple of stocks with him. Hi, Prakash. Could you tell us about your view on DLF? The numbers look good. How much of it is in the price? Do you think we're good for more? Because some believe that maybe we're still at the start of this big real estate cycle. Your take.
Good morning, Nigel. So I think, the kind of pre-launch numbers, kind of response to some of the recent launches does give you a feeling that things are shaping up very well, and possibly they are. But, you always have to take these numbers with a little bit of, reality check that they're lumpy. They are brought in together on a particular day of the launch. And that's when they open up, they start kind of seeming like this, exuberance on the demand side. My sense is what DLF is offering, the kind of price points that it is offering and servicing, it's a very small niche that cannot keep on expanding so rapidly. So, to pencil in this kind of expansion is a bit unreal. It will take some time. But what's very promising, Nigel, on the other side is that the Delhi NCR real estate market, particularly residential, for premium housing, that means we're not talking about affordable housing at any point in time. Premium housing is growing very rapidly. I mean, there are pockets in areas like Hauskas, Patel Nagar, where prices have gone up to 28,000, 25,000 per square foot, which is phenomenal, because just about a year back these used to be at that 15, 18 zone. So there is demand, and the quality of output from most developers out there is changing rapidly in terms of dependability, reliability, timeliness. So all that positive effect is having on the real estate market. There's a trust element that's come back. But on DLF specifically, whether it crosses that 500 Rubicon, my sense is it could at some point, but it's too expensive. The risk reward is not as favorable. You could look at other things out there, but this tells you that there's a market that's very promising for waiting to be tapped.
Prakash, hi, morning. Two other names, one looking better than the other. Colgate looked a little better as compared to the previous quarters. And on the other side, there is Cipla, where there seems to be a little respite. I mean, projections still after the quarter numbers put revenue growth at 5-6%. That's it. Your sense on both?
So I think both of them have been very great companies, but not necessarily great stocks. I mean, coincidentally, we're talking about both of them. And if you see different segments, very promising leadership status on some of the, areas that they straddle on. For example, Colgate has always been the vanguard of sorts in that category. But the fact that they've not been able to grow within that category because they would have to only grow organically now. And the segment is kind of, reaching levels of saturation. It's only, volume growth and price points that they would have to tweak with. So that's going to be a little bit of a lowering of P multiples, because you have far better, faster growing consumer businesses like Marico, Tata Consumer, even ITC, So I think Colgate probably is less on demand on the stock that reflects on the P multiples. Cipla, I think it's very clear you'll have your ups and downs, but they are also on the respiratory portfolio, the way they are growing. I would definitely have much more faith in their ability to expand the geographies and the product mix and bring themselves to a level where the margin seasonality or cyclicality is probably minimized. And once that happens, you'll probably have a very strong stock on the pharma portfolio in your portfolio. So to look at it from a reset perspective, Cipla is the one that I would look at very actively. Colgate, I would give it a pass. I know numbers are good, but I would still not kind of get too excited to buy it.
Okay. Just stay on, Prakash. We'll come back to you in a bit. The pre-opening